Are you looking for the best investment strategies to build wealth in 2023? Look no further. This video will provide you with the top 10 investment strategies proven to help you build wealth in the current economic climate. Our expert financial advisors have carefully curated these strategies after extensive research and analysis, and we are confident that they will help you achieve your financial goals. Whether you are a beginner or an experienced investor, these strategies are tailored to suit your needs. So, grab a pen and paper, and let's get started. Keywords. 1. Investment strategies. 2. Building wealth. 3. Financial goals. 4. Economic climate. 5. Expert advisors. Welcome to your ultimate guide to building wealth through investment strategies in 2023. As we all know, creating wealth is not an overnight game. It requires a consistent and strategic effort. In this video, we'll be discussing 10 investment strategies that will help you achieve exponential financial growth. From low-risk to high-risk options, you'll be sure to find the right fit for your financial goals. So, let's dive in. Investment strategies are an essential element of building wealth, especially in today's economic climate. However, with so many options available, it can be challenging to decide which strategy suits your needs best. Our expert financial advisors have narrowed down the top 10 strategies that will help you build wealth in 2023. These strategies include index funds. Index funds are a type of mutual fund or exchange-traded fund, ETF, designed to track the performance of a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. Advantage 1. Diversification. Index funds provide investors with a diversified portfolio by including a wide range of securities from the underlying index. Advantage 2. Lower costs. Index funds generally have lower expense ratios compared to actively managed funds. Disadvantage. Limited upside potential. While index funds offer the advantage of capturing the overall market returns, they also come with a limitation. Active fund managers, on the other hand, have the potential to generate higher returns by strategically selecting stocks that may outperform the market. Dividend stocks. Dividend stocks are stocks issued by companies that distribute a portion of their earnings to shareholders in the form of dividends. Advantage 1. Regular income stream. One significant advantage of dividend stocks is the regular income stream they provide. Advantage 2. Potential for capital appreciation. Dividend stocks also offer the potential for capital appreciation. Disadvantage. Limited growth potential. One potential disadvantage of dividend stocks is that companies that prioritize dividend payments may allocate less capital towards growth and expansion. Real estate investment trusts, REITs. Real estate investment trusts, REITs, are investment vehicles that allow individuals to invest in real estate without directly owning or managing properties. These trusts are traded on stock exchanges, providing investors with a way to access real estate investments with relative ease and liquidity. Dividend income. REITs are required by law to distribute a significant portion of their taxable income to shareholders in the form of dividends. REIT dividends can provide a steady stream of income, often with higher yields compared to other traditional income-generating investments like bonds or savings accounts. By investing in a REIT, individuals can gain exposure to a diversified pool of real estate assets across different sectors and geographical locations. Market sensitivity. REITs are influenced by market conditions and can be subject to price fluctuations, similar to other publicly traded securities. Roth IRA. A Roth IRA, individual retirement account, is a type of retirement savings account available in the United States. 2. As of 2021, individuals under 50 years old can contribute up to $6,000 per year, while those aged 50 and above can make an additional catch-up contribution of $1,000. Tax-free withdrawals. One significant advantage of a Roth IRA is that qualified withdrawals made during retirement are entirely tax-free. No immediate tax deductions. Unlike traditional IRAs or certain employer-sponsored retirement plans, contributions to a Roth IRA are not tax-deductible. It's important to note that the advantages and disadvantages of Roth IRAs may vary depending on individual financial circumstances and future changes to tax laws. Exchange-traded funds, ETFs. They are a diversified investment option with a low-risk profile and provide an excellent long-term investment opportunity. Exchange-traded funds, ETFs, are investment funds that trade on stock exchanges, similar to individual stocks. They are designed to track the performance of a specific index, sector, commodity, or asset class. ETFs can be bought and sold throughout the trading day at market prices, providing investors with flexibility and liquidity. They offer a convenient way for investors to gain exposure to a broad market or a specific sector, without having to buy individual securities. Advantages of ETFs. 1. Diversification. ETFs provide investors with instant diversification because they hold a basket of underlying assets. 2. Lower costs. ETFs are known for their relatively low expense ratios compared to actively managed mutual funds. As a result, ETFs tend to have lower management fees, making them cost-effective investment options for long-term investors. Disadvantage of ETFs. Lack of active management. While the passive management of ETFs is an advantage in terms of cost, it can also be a disadvantage for investors seeking active management. ETFs typically aim to replicate the performance of an index or sector, which means they won't outperform the underlying benchmark. Investors should carefully consider their investment goals, risk tolerance, and conduct thorough research before investing in ETFs or any other financial product. Peer-to-peer lending. Peer-to-peer lending, also known as P2P lending, is a form of lending that connects individuals or businesses looking to borrow money directly with investors willing to lend it, without the involvement of traditional financial institutions like banks. Competitive interest rates. Peer-to-peer lending can offer competitive interest rates compared to traditional lenders. Since P2P lending platforms connect borrowers directly with individual investors, it eliminates the need for intermediaries and associated overhead costs. Default risk. One significant disadvantage of peer-to-peer lending is the risk of borrower defaults. Micro-investing apps. Micro-investing apps are mobile applications that enable individuals to invest small amounts of money in various financial instruments, such as stocks, exchange-traded funds, ETFs, or cryptocurrencies. Advantage 1. Accessibility and affordability. Micro-investing apps break down the barriers traditionally associated with investing, such as high minimum investment requirements. Advantage 2. Easy and user-friendly. Micro-investing apps are designed to be user-friendly, often employing intuitive interfaces and simplified investment processes. Disadvantage. Limited investment options. While micro-investing apps offer convenience and accessibility, they generally have a limited selection of investment options compared to traditional brokerage platforms. High-yield savings accounts. A high-yield savings account, HYSA, is a type of savings account that offers a higher interest rate compared to traditional savings accounts. Advantage 1. Higher interest rates. One of the primary advantages of HYSA is the higher interest rates they offer. Advantage 2. Accessibility and convenience. High-yield savings accounts are often offered by online banks, which means they provide convenience and accessibility. Disadvantage. Potential limitations on transactions. One potential disadvantage of some high-yield savings accounts is that they may impose limitations on the number of transactions you can make within a given period. Commodities. Commodities refer to raw materials or primary agricultural, energy, or industrial products that are widely traded in standardized forms on commodities exchanges. Since commodities often have low or negative correlations with other asset classes, such as stocks and bonds, investing in commodities can help reduce overall portfolio risk. Major advantage. Inflation hedge. Commodities are often considered a natural hedge against inflation. Major disadvantage. Volatility. Commodities can be highly volatile, experiencing significant price fluctuations due to various factors such as geopolitical events, weather conditions, technological advancements, and global supply and demand dynamics. Cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for secure financial transactions, control the creation of new units, and verify the transfer of assets. Advantage 1. Security and privacy. Cryptocurrencies provide a high level of security due to the cryptographic algorithms used to secure transactions. Advantage 2. Decentralization and accessibility. Cryptocurrencies operate in a decentralized manner, meaning they are not controlled by any central authority like a government or financial institution. Disadvantage. Volatility. One major disadvantage of cryptocurrencies is their high volatility. There you have it, the top 10 investment strategies for building wealth in 2023. Remember, the key to building wealth is consistent investment and discipline. Find the right investment strategy that suits your financial goals, risk profile, and time horizon. If you have any questions regarding these strategies, please don't hesitate to contact our expert financial advisors at info@smart-logic.tech or visit our website at https://smart-logic.tech. Thank you for watching, and happy investing.